Welcome to How to Crush the Futures and Forex Market, the basics. In this video, we're going to go over the basics to the futures and foreign exchange market. So the foreign exchange market, also known as the Forex or FX market, is the largest financial market in the world. And because of that, it has the highest trading volume and highest liquidity. The foreign exchange market trades currency pairs. It's open continuously, 24 hours a day except on weekends, trading from 2200 GMT on Sunday, Sydney time, until 2200 GMT Friday, New York time. So what exactly is trading Forex? If you've ever traveled to another country, say Japan, you usually have to find a currency exchange booth at the airport and then exchange the money you have into the currency of the country you are visiting. You go up to the counter and you notice a screen that displays different exchange rates for various currencies. And when you exchange your dollars, say if you're American, you exchange your US dollars into the Japanese yen because that's a country you're visiting. When you do this, you essentially participate in the Forex market. You exchanged one currency for another. Or in Forex trading terms, assuming you're an American visiting Japan, you've sold US dollars and bought yen. And before you fly back from your trip to Japan, you stop back again at the currency exchange booth to exchange the yen that you had left over. When you do this, you notice that the exchange rate has changed. It's these changes in the exchange rates that allow you to make money in the foreign exchange market. And that's basically what the Forex market is. Now the futures is a little bit different. The futures market is a financial exchange where people can trade standardized futures contracts. A contract allows you to buy specific quantities of a commodity or financial instrument at a specific price with a delivery set at a specific time in the future. So let's talk about contracts. Let's say, for example, that you decide to subscribe to cable television. As a buyer, you enter an agreement with the cable company to receive a specific number of cable channels at a certain price every month for the next year. This contract made with the cable company is similar to a futures contract in that you have agreed to receive a product at a future date with the price and the terms of delivery already set. You have secured your price for now and the next year, even if the price of the cable rises during that time. By entering into this agreement with the cable company, you've reduced your risk of higher prices. And that's basically how the futures market works, except instead of buying cable television or from a cable TV provider, a producer of wheat may be trying to secure a selling price for the next season's crop, while a bread maker may be trying to secure a buying price to determine how much bread can be made and at what profit. So the farmer and the bread maker may enter into a futures contract requiring the delivery of, say, 5,000 bushels of grain to the buyer in June at a particular price of $4 per bushel. By entering into this futures contract, the farmer and the bread maker secure a price that both parties believe will be fair price in June. In this contract, and not the grain per se, that can be bought and sold in the futures market. So the futures market is basically an agreement between two buyers. In every futures contract, everything is specified: the quantity and the quality of the commodity, the specific price per unit, and the date and method of delivery. The price of a futures contract is represented by the agreed upon price of the underlying commodity or futures instrument that will be delivered in the future. So these are the major currency pairs that we're going to be trading. We're going to be trading them because they are the most liquid, and they're the most liquid because all of them but one is denominated in the US dollar, which is the most popular trading currency. So the first one is the Euro dollar or the European dollar. The next one is the pound dollar or the British cable. The next one is the Aussie dollar. This is the Australian dollar. The next one on the list is the Euro pound. So it's the European dollar versus the British pound. The next one on the list is the dollar CAD or the dollar loonie. This is the US dollar versus the Canadian dollar. The next one is the Kiwi dollar. or the Kiwi, because it's the New Zealand dollar versus the US dollar. The one below that is the US yen or dollar yen, US dollar versus Japanese yen. And the last one on the list is the dollar Swiss or Swiss franc. These are the major futures instruments that we're going to use. The S&P 500, gold, copper, soybean, crude, nat gas, sugar, Dow Jones, and treasury notes. And that's it for this video. See you on the next video.